Welcome back. You're tuned in to Chartbusters. So let's get our next management on the show. We have security and surveillance products maker Aditya Infotech, which has made a strong debut on the street, listing with gains of over 50% to its issue price. To discuss the prospects of business going ahead, we're now joined by the managing director, Aditya Khemka, and Anup Nair, the president of strategy and business at the company. Hi, gentlemen. Good morning. Thanks a lot for joining in. Congratulations to all of you all. It's a big day for you, for your team, your families as well. So wishing you all the best. But, you know, the very fact that the stock has opened up higher, the street will want to know some kind of guidance from you all. So give us a few details. What kind of utilization levels are you functioning at currently? I believe your market share is ballpark 20%. Where do you see that number headed? And if that's the case, what kind of growth are you looking at? Do fill us in with this.
Yeah, so thank you for having us, and I think we're highly grateful for the response we've got from the market on the listing. It's something we've been dreaming and cherishing for years. Thank you so much. So Aditya Infotech and CP Plus is one of the leading CCTV and surveillance company in India. We've been literally playing the role like an evangelist of this industry for last over 2 decades now. And we have, the largest dealer distribution network across 550 towns. The manufacturing is 3rd largest in the world in Kadapa, Andhra Pradesh. This is like the largest plant outside of China for CCTV and surveillance products manufacturing. And a lot of backward integration to take the company to Atmanirbharta, as the Prime Minister says, to become Atmanirbhar. We are working towards that direction. And, being the only brand, the only Indian brand at that space we are in right now, and the only brand known at the customer level with our, tagline, Upar Wala Sab Dekh Raha Hai, which really helped us resonate well with this technology and giving a name to this category. I think we are at a sweet spot and a perfect position to deliver value to our shareholders moving forward.
What are the numbers though? Let's get to some numbers. Utilization levels and
in terms of market share. So the market share for the company is at about 25% plus, and the market share that you were mentioning is for the own brand CP Plus. So that was at about 20% plus, and the current utilization levels is at about 75%.
All right. One of the questions that the street has is that a large part of your inputs are imported from China. Is there a country risk there? And what are you doing to integrate yourself fully from India? And even the products that you make from India, what are your imports for the components out there?
Yeah, so I think, Government of India has also come out with this new certification called STQC, which has several clauses regarding cyber security and trusted supply chain. So the company has, over the last several quarters, diversified the whole supply chain for all the critical components outside of China. So our dependence on the critical components or the semiconductors is no longer on China. So it's largely on American companies, Taiwan companies, and using Taiwan fabs. Once the fabs in India come up, which we are hoping, we could also localize the semicon, which is the major chunk of the BOM component. And apart from that, a lot of localization has already happened in things which we can do in India, be it all kinds of power electronics or cable connectors, housings, and stuff like that. All that is already done in India, and a lot more is in the process. And as we see the electronic component manufacturing scheme showing some colors in the coming future, the passive electronics can also be localized. So I think it's a journey. We started as an import model, moving into manufacturing, into R&D, and now into localization. And also, we are working with companies like L&T Semiconductor to design IP camera chips from India. So the SoC design work is also going on. So a lot of work like that is happening. Even we just started lens manufacturing in our plant. I think one of the only companies to try that out. And those are things we are already initiating.
All right. 2,200 crores was the revenue in FY23. That moved to 2,800 crore and thereafter 3,100 crore in the last financial year. What is the potential growth rate that we should be looking at for the revenue for your company? What pace is the industry growing at?
Yeah, so the industry over the, let's say, last 5 years in India has been growing around 17%, and we have been trying to beat the industry growth over the last 5 years also, and we've been fairly successful. We hope to continue the same growth in the future, beating the industry and expand our market share, and hopefully with the new changes in the dynamics of this industry, with the STQC certification and the pushback to the neighboring country brands, which the government of India has already regulated, I feel Indian brands like ours tend to hopefully gain better market share, and we will strive for that.
And what about margins? Will hold around 8%?
So margins are around 8.5% EBITDA, and like Anup mentioned, 20% is of our own brand, and the balance is we continue to distribute another brand from China. But with this new regulation and tailwinds, a large chunk of our business will move to our own brands where we have a better margin. So we hope to increase that, and now even the manufacturing is 100% subsidiary. So earlier we used to consolidate half of the margin. We will have full margins consolidation. So overall, we hope the EBITDA level should be.
So 20% from your own brand goes to what number?
No, so I'll take that. So what he meant is that the own brand share within the revenues is at about 75%, and the 25% is a distributed brand. So the blended margin is what you're seeing at 8.5%. Right. And the own brand margins would be almost 3x the distributed margins. And with the tailwinds, it's the own brand that will grow aggressively. And so
from 75-25, what will the ratio look like?
So I think we believe it might go to a 90-10 because the neighboring country brands cannot qualify for selling IP cameras any further with the new regulation. So their play will only remain in the analog camera technology, which is more like a flat market.
So say 3 years from now, possible for you to get to almost 6,000 crores of revenue along with double-digit margins, given your past run rate and the triggers ahead?
So I don't know if I can comment on that with the futuristic numbers, but we would love to be there.
All right, take that point. Thank you so much, Aditya and Anup, for joining in. The street has placed a big responsibility on you all. The stock is up 60%. The issue was subscribed 100 times. So obviously, it's on you to go ahead and, repose return the sort of faith that everyone has shown on your business. With that, we'll take a short break, come back on the other side. We're getting more of the markets and stock-specific action.